There is a new narrative among the professionals, the analysts, the pundits. Based on my reading of hundreds of articles every single day, it is important that we take a look at the economy, the trends, where the market is headed, based on what I believe is a completely new narrative that started about a week ago. The market always looks out 6 months or so, and right now, the bull market that we have seen over this last year was predicting this strong third quarter that we just experienced. And now we're seeing the correction of the last 60 days or so before it started going back up again. That correction might have been predicting the softness that everybody's expecting in quarter one. But now we're in the new leg of the bull. This could go on for quite some time, and it's predicting that sometime in quarter two, business will start increasing again, and we'll see a decent end of next year. Now, what are the components of this narrative? How did I come to this conclusion? Why do I think that almost everybody right now seems to be on board with this idea? Well, I'll be digging deeply into that in this episode. So this is Randy Kirk. Please hit like and subscribe now with regard to hitting, the button that will notify you every single time there's a new episode coming up. I've got Larry coming up this afternoon. I have got Brian Wang doing 3 episodes this weekend, 3 deep episodes. One on hybrids. It'll be completely different than anything you've ever heard. One on the Tesla energy, not the regular Tesla energy business. No, the Tesla as a utility business. Nobody's talking about this. Is kind of the secret business that could be one of the biggest businesses of all. And then we have a third one. I'll just keep that a secret for now, unless you listen to this morning show when I did advise what that would be. Anyway, all that's happening this weekend, plus the regular news show on Saturday, the regular Monday morning show on Sunday night, and all that happening this weekend. You want to be notified of what's coming up. I do want to say, I think that the Elon Musk faux pas from yesterday has already gone away. We see the stock market, or we see Tesla outrunning the market again this morning. So I think everything's pretty much back to normal. And I did predict that this morning. All right, so let's take a look at this narrative. Most critically, the narrative is now clear on inflation. Just about nobody is expecting inflation to be an issue after quarter one of 2024. A couple of Fed officials are still nervous, but maybe I don't know how much of that is a put on or how much of that is just because that's their makeup or their inclination to be negative in that way. Walmart and Costco. Who else would you rather hear from? Both Walmart and Costco have both said deflation is likely. Costco was stronger in their statement, but Walmart said it looks like deflation coming. Kathy Wood is convinced that we're going to get some deflation, good and bad coming. So the good deflation is the deflation that's caused by productivity. The bad inflation is the kind that's caused by a slowing business climate, requiring certain companies to lower their prices in order to move goods. I personally think there will be deflation in some sectors, but anyone who's expecting deflation in owned dwellings, airline tickets, hotel rooms, or eating out is going to be sadly mistaken. Those 4 categories are going to be up again next year. Now, will they be up 10%, 6%? No, they'll be up 2.5%, 3.5%, 4%, but they will continue to go up because that is where in 3 cases, the tickets, hotel rooms, and eating out, that's because people are going to continue to travel. The aging population is traveling, and they've got the money to do it, and they don't care what it costs to a great degree. And then with regard to owned dwellings, there's just not enough of them. So we have a supply-demand issue there, and that is going to continue into 2024 and probably well beyond that. And of course, as interest rates come down, that's even going to create more of an opportunity for people to go out and buy the severely limited number of homes that are available. On the other hand, depending on the severity of this particular winter, both here and in Europe and even in China, we could easily see deflation partially due to all the fossil fuels and most of the commodities staying at current lows or even dropping lower. So if we have a particularly easy winter in the United States, we could see oil prices and gasoline prices and natural gas prices dropping to some significantly lower numbers than we have right now, because people don't drive as much during the winter, and the oil companies make that up with heating oil and natural gas, but it looks like it could be a mild winter. So we'll see what happens on that. But the biggest driver of deflation, of course, will be productivity, my hobby horse. And this will be partially due to innovation, as Kathy Wood points out, but partially due to this more balanced economy. There's no longer these supply chain and employment shocks disrupting normal business efforts to reduce costs. So normally companies are looking for ways to reduce costs across the board any way they can. In the employment space specifically, there is less agreement, but no one is predicting horrible unemployment in 2024. My own take is that we'll see unemployment creeping up as companies jettison poor performers, and some who are going to be displaced by GPT or other tech. So you'll see these two reasons why people will be getting laid off. Last year, people were holding on to these marginal employees because they just didn't know where they were going to get anybody to fill that spot. But as things get a little easier and a little more smoothed out, you'll see companies getting rid of those poor performers. And then ChatGPT is definitely, and that things like GPT are definitely going to start thinning the herds. And then of course, there's just normal opportunities in all kinds of tech that will be reducing employee counts also. Now, I don't know whether we'll get back to 3.5 sometime in 2024 as the economy begins to pick up again, but it is possible. So the 3.5% unemployment level is possible. I'm saying, though, it probably stays in the 3.5 to no higher than 4.5, and then it's somewhere in that range. One of the big drivers of the improving economy in Q2 forward will be interest rates declining. There's almost universal belief now that the Fed will cut sooner and more often than they're saying they're going to do. The current idea is that the cuts will start in April and that there'll be 4 cuts of 25 basis points each. I think it's going to happen sooner, or it should happen sooner, and that 100 basis points is a minimum for 2024. The Fed will need to catch up with falling inflation numbers and falling yields in Treasury. If the Fed is at 5.25 when Treasuries are at 3.5, that disconnect cannot last. And if the Fed is at 5.25 when inflation is at 1.5, that's another disconnect that can't last, and the Fed will have to play catch up. It would be so much better if they, using all of the information that they've got at their fingertips, if they were able to start saying, no, we're going to front run these two issues. We're not going to be playing the laggard again. Well, as you've heard from me, and especially from Larry, the elephant in the room is money supply. There currently is enough money, and the velocity is okay, but the Fed has a lot of control on this, and they will likely loosen at some point, but right now they're continuing to tighten. And I worry that this is the place where they could mess up what otherwise looks like a very Pollyannish 2024. Nobody's talking about this. I mean, literally, again, I read all these articles every single day, and nobody is talking about the money. So, okay, a few people are mentioning that it's low, but nobody's urging the Fed. Nobody's saying, hey, you guys need to start loosening sooner rather than later. All they talk about is the interest rates. But I'm telling you that the cash is just as important, and sometimes way more important, if the cash policy, if it gets too restrictive. Okay, as mentioned earlier, home prices will be up in the spring, just as the sun rises in the east. Rents, however, I think will remain stable. I don't hear much about rents yet in 2024, but I'm expecting them to be reasonably within range. The dollar is likely to drop some, just like it has this past week. But then other countries will be forced to drop their interest rates too, and so their currencies will drop vis-a-vis the dollar. So the dollar will end up maybe a little lower than now, because it's been really, well, it's been in the middle of a trading range over the last 30 years, but I think it's going to go a little lower than this, but not anything, nothing that's going to create any disruptions in terms of how goods and services are traded worldwide. The Congress will do absolutely nothing about the deficit or the debt, which is the biggest issue on the table. It won't matter in 2024. Let me stop and say that again, because I don't think that the problem of the spending and the deficit and the debt, even with all the interest payments, I don't think it's going to matter in 2024 in terms of the economy. It may not even matter in 2025. But unless we grow really fast in the economy so that we have lots more tax revenue coming in, and unless we stop some of this spending, or at least stop the increases in the spending, at some point, this is going to be a massive issue that we as a country are going to be faced with maybe no good, easy solutions. It turns out there have been 23 elections since the S&P 500 index began. And in these election years, 19 of the 23 years, 83% provided positive performance. So in this coming 2024, based on history, we have an 83% likelihood of positive performance. When a Democrat was in office, like now, and a new Democrat was elected, the total return for the year averaged 11% increase. When a Democrat was in office and a Republican was elected, the total return for the year was at 12.9. So vote Republican if you want an extra couple of percentage points. Now, here's interesting. The Bush reelection and the Obama reelection were both down years. The Obama reelection year, now this is the year leading up to the election, was down 37%. So these are the two most recent times when presidents were up for reelection, and both were not good. So this could be one fly in the ointment for 2024. All right, let me know what you think in the comments below. Did I get some of these things right? Are you looking for a great year in 2024? Do you think the bull market continues all the way through 2024, which I think is a great likelihood? And then we'll see what happens in 2025. But right now, that's how I'm seeing things. I see the economy being strong in 2024. What do you think? I'd love to hear your comments below. Now, you've got to remember to get yourself one of these Cybertruck bottle openers. You may notice that on my shelf behind me, there is no longer a camo sitting there. And why is that? Because I ran out. I had to ship it. So if you want a camo, the camos are not going to be shipping until a week from Monday, roughly. But we have plenty of these still in stock, selling extremely well right now. I'm very excited. Thank you so much for everyone who's bought one. And $25 for one, $45 for two, $65 for three. All the information is down below in the description, and you send your money to paypal.me/Randy Kirk, all in lower cap, and $20 if you're out of the country for freight. And please let me know if you want camo or stainless steel finish. Remember also, please join Patreon. I'll talk more about Patreon. When will I talk about Patreon again? Probably not till tomorrow afternoon, but we need a bunch more folks to join. It's been really good so far in the month of November in terms of new people coming in, but we need to keep it up because it's been flat for a few days. Okay, this has been great talking to you as always. Looking forward to all the shows that are coming up over the weekend.